Hey, what's going on, my friends? It's Friday, May 15th at around 3:35 in the afternoon Eastern Time. So the market's still open. I've got some other things going on, so I thought I'd make this video a little bit early. Usually I make it after the market closes, but with regards to what I'm talking about, it doesn't matter when I do it. So anyway, thanks for tuning in, and let's follow up on a couple ideas here. Then I want to show you an amazing pattern from one of my ideas that I posted in Twitter. People were asking me about where I got it, so I thought, all right, well, I'll do a lesson here, show you where the entry was for me, and it's really a standard pattern that I use a lot to make profits, and it's something that you can apply obviously if you're following charts and looking at ideas and you have a nice bias, and that's what I try to do with Twitter's for ideas. Say, hey, I'm watching this long, this short, etc., so that people have an idea of which way I'm leaning at the time. Of course, you have to have a plan, you have to know what you're doing, you have to have stops, and you have to be able to switch directions and go the opposite way if the market or the stock that you're looking at is giving you different information. Okay, don't be afraid to switch it up, but that takes a higher level of development with regards to your trading. CENX talked about this as a swing idea over the last couple of videos. Here we are still extended down, but it's getting less extended because things are catching up. We've been hanging out here now for literally 3, 6, 9 weeks in this price area between 15 and about 13. Okay, so it's working off that extension. Okay, and it could be setting up for another leg down. Okay, so now I'm less um, uh, relying on the snapback effect off the extended move because it hasn't been able to jump. Okay, but the bottom line is this is a very potent day off earnings. It's held up. It pulled back here. Those of you guys that got in swing here, you're doing fine. If you're trail stopping it or whatever, you may be out of the position already. Okay, you manage it to your plan, but technically this thing is fine. The stop on this thing, if you're looking long on this particular issue, 1235 is the absolute low here. 1260 is the low here, and most conservatively 1303 here. Okay, so it popped up, try to get back up to in this area here, and it's topping tailed out over the last couple days, and today it's working its way back down into the support area. I'm going to be watching it closely again for day trades, all right, as it comes back down to the support area and possibly swinging again in this area here. If it comes back down to the support area and seeing we can go long. Okay, if the market and the sector is aligned with a long. Would I short it at this point? I'd be open to doing it if it starts to fall apart here pretty rapidly. Okay, I'd prefer to have about 3 to 4 more weeks in this area without going up or down, just kind of hanging out sideways, letting this catch up to it, and then you may want to get then the play and bias may be more to the short side. So from a swing perspective on the long side, it's a little bit more of a overnight, couple day pop at most. Like I said, top end target for me would be $17 to $18 here. At this point, 20, absolutely. If there's some news or something that drives this thing, but right now we're kind of in the middle of this little range here, where it's trying to kind of rise out of this area, but hasn't been able to do so just yet. Keg was another one I want to follow up with. Again, big cup with a handle, dropped off volume. Buy could have been in any of these areas here. 2-year plan. It's moved up here, topping tail out. Really has just gone sideways over the last 6, 7, 8 trading days. Hasn't been able to get going. And as we look at the weekly chart, you'll see that it's trying to bottom here. Like I said, the reason I liked it in the first place was this higher low here off the weekly. Okay, so it's been profitable. Some of you may be out. Again, manage it to your plan. At this point, if you're swing long in this thing, you may want to just cap it out here about 240 as a stop. Or, of course, if you just have a normal set it and forget it type mentality, keep your stop at $2 a share or thereabouts and see how far she can go. Like I said, top end potential on this thing. Obviously, it can go as high as it wants to, but based on the retracement here or the move down, I'd look for a move up to the $5 or $6 mark if you're in this for the long term. As you can see, this doesn't move very much. There's not a lot of volatility. The daily ranges are, let's see here, 20 cents at the most. So it's not a big dynamic mover, but it's a cheap stock, and it might be in your wheelhouse with regards to how you like to trade it. So that's the update on KEG. It's working here. It's higher than the entry point on the swing, but it's just kind of toddling along here and not really going anywhere. Now the moving average is rolled over and is catching up to it, and that could give it act as a catalyst to get this thing popping to the upside. So if you're long in this one, I'd say stick with it, but always follow your plan. There's nothing wrong with this one here. It's looking fine. It's just kind of stalled out here, not really moving at this point. All right, and the other stocks I talked about in the last videos, again, if you have questions about any particular one, just email me to keep these videos shorter in length. I'm going to focus on just a few of the ideas, and then of course talk about some other things that I think are whatever is valuable. This I think will be an invaluable little lesson here on the Facebook that I tweeted about. Now, yesterday when this thing came into focus, it had gapped up here in this area, and you'll notice that when it gapped up really over these last 3-4 days. This is a 60-minute chart. 3-4 days of trading action. Okay, and that's also after, right, a pronounced move down off this double top here. Okay, so this thing with a strong day, I liked it as a long, and I tweeted about it. And let me tell you exactly about where I tweeted about it. You can go to my Twitter feed if you'd like. I talked about it right, and let me back this up. Right in here, I said, watch as a long. Then it came down violently, took out the low, turned right around, and came up. Now, when you see a formation like this, okay, when I see a formation like this, where you've got something that's gapped up on the higher time frames and looks great, the market environment is conducive to longs, okay, it's supportive of longs. We had a strong day, gap up yesterday, strong markets. Tech was strong, okay. This one, although herky-jerky, it's telling you something. The ability, the fortitude of the longs to hold through something like this, okay? That if they're more on a micro time frame, they've got to have some pretty good resolve to want to stay long on this thing. So what this does is it shakes out the weaker holders, okay? It's violent, it was vicious, okay? Notice the volume here on the red candles as it came down, took out lower, okay? And then here was my tip-off. The next candle, this is again a 2-minute chart, okay? This candle came rocking right back up to that 79 area, okay, about where it opened, after that vicious move down on higher volume. And my ears and eyes went perking right up, and I said, all right, time to watch this. Let's see if it, and sometimes it doesn't set up. Because if this thing on the next candle just here and just started ripping higher and went straight up, I wouldn't have traded it, and it would have gone to where it went to, and I wouldn't have been on it because it did not give me what I want. I repeat, it did not give me what I want. You got to start. You can't be chasing everything. Demand what you're looking for, and if you don't get it, then don't get it. There's many instances like this where I see this radical shakeout, and I'm like, okay, I'm long biased, and it's gone. And instead of sitting there kicking myself, going, gee, I should have got it, should have, could have, would have, no, it didn't set up. You shouldn't have got nothing. And if you took it, you're gambling, and there'll be hell to pay if you keep gambling. It's just a matter of time. It's not a matter of if. It's just a matter of when you're going to blow your account up. Okay, you've got to stay disciplined. But now that on low volume, are you kidding me? That's exactly what I was looking for. I'm watching this. I see it violently move like this, and then it calms down over the next 2-minute period in about a 15-cent range on lower volume. There's your cue. Buy it over 79.03 or 79.08 or 79.10ish, okay? And you can put your stop below that little tight candle, 78.98, 78.95, 78.90 if you want to give it room, okay? You can also say, well, I want to put my stop way down here at the low at 79.60. Well, that's a safer stop from the perspective of it'll take a lot more for this thing to go down and stop you out, okay? But typically from a reward to risk perspective, I keep it tighter. I don't have a problem with a lower win percentage, okay? I thrive on it. I prefer to get stopped out, keep my risk tight, and then when I get them runs, I'm getting 4, 5, 6, 10R risk units off my risk. That to me is a better way to go, because when these things go, they can go and they can keep going. And just because it comes down and takes out this low doesn't mean it can't clip it by a couple of pennies, turn right around, go right back up. Okay, so to each their own. Have a plan. Okay, know what you're doing, know what you want to do, know where your edge is. If you don't trade, please. Okay. Hits. Okay. In. Hit my trigger, in. Stops in place. Okay, gave it about a nickel below. It's hanging out. Topping tail. Okay, that's a concern. A lot of nervous Nellies are out. They see the time, they better get out, or God forbid they go short on this thing. Okay, now mind you, these are 2-minute candles, so this is happening pretty quickly. Okay. Comes right back up, engulfs green. Nice, things are looking good. I'm like, hey, you know what? I don't care. Stop me out. I don't care. My stop's there, under 94, 78.94. If it hits it, it hits it. I'm done. So what? Next. I don't see the topping table. Oh my gosh, wring my hands gee, maybe I should just get out. No, it hasn't hit my stop yet. It either does or it doesn't. Okay, pops up, and then, okay, an even bigger red candle. Okay, and I've worked with people in the past, okay, that see this and they're up, candle by candle. Let's analyze this. This is bad. Volume picked up. Time to get out. Let's just bail out and break even. We don't want to have a loss. I want to break even. Okay, and again, I just said I have my stop in. Fine, stop me out. I don't care. I'm willing to risk that money. Okay, and there are times when it will stop me out. I get stopped out quite a bit actually. Okay, a lot more than I used to. Okay, but what I found is that when I get stopped out more, when I have a stringent plan, I do better. I make more income when I'm less focused on micromanaging my trades. Then it engulfs again. So top and tail, green bar, red bar with a top and tail, a green bar again. And so again, I'm not throwing a party. I say, okay, fine, stop me out or go to my target. I don't care. Do what you want to do. Either way, I'm happy. And there it goes. Starts going. Volume starts getting high. And there it goes, man. It's hit 60. Red bar. Okay. Tries to clip here. Explodes. I'm thinking, okay, I'm going to go for the $80 mark. Okay. Tops out there. Pulls back just short of the $80 mark on the 2. And there it goes. Hits my first target. Okay, looks really, really good. Now, how you manage this from here is totally up to you. Okay, let me go to the 5-minute chart so we can look at it on a longer time frame. Okay, here's my entry here. You can't really see it on the 5. It's just a flip it, bottoming tail slingshot right back up. Okay, hit the $80 target, went to 81. It kind of topped out here about 80.50, 80.60, 80.70, and then it just kind of based here a little bit and then grinded back up. Okay, so you can trail stop on the 5. You could say, well, I'm just going to hold to the end of the day and leave my stop in there. I'm going to go to a 15-minute chart and trail stop it. I'm going to go to a 60-minute chart. Oops, not there. 60-minute chart and trail stop it. Whatever your plan shows and dictates is the best way for you to make money in the long run. Is the way you need to manage this. Okay, so I think an invaluable lesson there on the 2-minute chart on Facebook. For those of you guys who were asking about how I got in, where I got in, this is, again, when you see a situation where you got a rapid move down, okay, and the volume is less and it pops back up and it gives you a tight entry where you get a stop that's reasonable, take a shot. That's what I'm looking for. It's this reversal to the vicious move in one direction. Plus, you've got the higher time frames and the market supporting it. Which, again, I don't want you to poo-poo on that. Okay. People tend to get so one-dimensional. So they see this and they're like, all right, well, I saw Tom do this. Let's just buy the crap out of this. No, the market's not conducive. If it's an all-short market, as red as hell, I may go short on this exact same setup. You can't look at these in a vacuum, I found, okay, if you want to be profitable at this consistently over the long term. All right. Hope you found this video useful and this lesson useful. I think you will. Put into practice. Watch for these reversals like this, tight entries. Have good trading. See you next week, and have a great weekend.